Hey guys, Nick here from Nick's Taxes, and in today's video I want to talk about some potential tax saving tips for first-time home buyers in Canada. Now, buying a first house is going to be one of the biggest and one of the most expensive purchases you will make in your lifetime. So it's important to understand everything that involves buying a house, and that includes the tax implications. Now in Canada, buying a house for the first time is a way that you can potentially qualify for a first-time home buyer. And that's obviously someone who is buying a house for the first time. And the CRA provides some tax-saving incentives for those who are buying their first house. In this video, I'm going to walk through some first-time home buyer tax-saving tips and how you can actually save by using these tax incentives compared to not using these tax incentives. So the first instance, without using them, you might look at buying a house and just keeping that money in your bank account until you're ready to make a down payment on the house. Let's say you have $20,000 sitting in your bank account earning about 1% per month. You hold it in there for 3 months before making your down payment on the house. You're going to make about $600 in interest income. You'll then receive a T5 at the end of the year and pay taxes on that interest income, and that tax will be charged or will be at your marginal tax rate. So let's say, for example, for this video, we'll say your tax rate is at 25%. You've made $600, let's say, in interest income, taxed at 25%. You would be paying about $150 in tax while it's sitting in your bank account there. For this video, we're going to be talking about the home buyers plan. And that is an incentive, a plan set up with the RRSP, the Registered Retirement Savings Plan. And this allows you to withdraw money out of your RRSP for the purposes of buying your first home. And when you contribute this money into the RRSP, you get to save money on your taxes. The type of contributions that you make into your RRSP lower your taxable income for that tax year. So let's say you have that same $20,000 and you contribute it into your RRSP, $20,000 into your RRSP at a 25% tax rate would save you about $5,000 in tax. The kicker though with the home buyers plan is that you need to have this money in your RRSP for at least 90 days or 3 months. However, the money that you put into your RRSP will grow tax-free while it's in the account. So unlike the example where we just had it in your bank account, earning some interest income, any interest income that you earn in that time while it's in your RRSP will be tax-free. So now you take out that $20,000 from your RRSP as part of the home buyers plan. You then can use it to pay off or to put as a down payment for your house. But the kicker is you have to repay that money back into your RRSP. And you have 15 years to do so, starting the second year after you take that money out. So let's say we took the money out of your RRSP in 2019. You have to start repaying that money back in 2021. The other nice thing is that there is a first-time home buyers tax credit, and it's a $5,000 tax credit, which is equivalent to $750 in actual tax savings. So if you put these two together with your home buyers plan and your first-time home buyers tax credit, you could be looking at $5,750 in tax savings. You could get this as a refund and would be a nice addition to your cash flow in the year after you purchased your house. Now, obviously, this isn't ideal for everyone. Everyone has their own specific tax situations. So before you look at making a decision like buying a house, it's important to talk to people like an accountant or a financial advisor who can give you specific advice geared to your exact situation. But the home buyers plan is something you should definitely look at as a way to save money and save taxes in the year that you're buying the house. So it's a great way to get some relief and to get some extra cash once you have that house that you can put towards the house or to other expenses that come with owning the house. So that's the home buyers plan. If you have any questions regarding it, please let me know in the comments below. The max, if you want to know, the max for the home buyers plan is $35,000. So you can't take out $40,000 out of your RSP towards down payment of the house. The maximum for one person is $35,000. If you're married, you can both take out $35,000 and you could have a total of $70K for the home buyers plan, but each one is separate. So if you have any other questions about the plan, let me know in the comments below. I will also link in the description a link to the CRA website with more details on the home buyers plan for you to do more research yourself. And yeah, if you got value out of this video, please give it a thumbs up, and I will see you guys in the next video. Happy taxing.